All right. Good morning. Happy hump day. Hope everybody's doing well today. It's been a long week from last live stream. I have moved into a new house. So there's that. One second here. Let me see here. What did I do for that? I don't do that. There we go. Okay. Sorry about that. I moved into a new house in the middle of a snowstorm, and that was pretty incredible. And yeah, so it was delayed internet, a lot of issues, but we got through it. We're getting pretty much through the boxes now, getting set up. Got beds for everybody, dressers, clothes, all that kind of good stuff. So here we are. Another great day of trading. Glad you guys are here. I have new internet, so there should not be any delays or buffering, and I changed the ads, so there should be less ads for you on your side. So hopefully that works for you guys. Interway Flow, welcome to the stream. Good morning, Jacob and family. Wish us all a green day on this pre-Christmas hump day. Yeah, next week is Christmas Eve, so there will be no stream next week, obviously. Actually, for the next 2 weeks, because the week after that will be New Year's Eve, and then the Wednesday after that we'll be back with live streams moving forward. So hopefully, I just turned up the volume. Does that help? Can you guys hear better now? Joseph Rapp, welcome to the stream. I can turn it up a little more if you need it. See if that's any better. Can you guys hear me better now? That's as high as I got right there. So I'm not sure why the volume is. Maybe check the volume on yours computers as well, but I have it on as high as I can on my microphone and the mixer. So um, maybe that'll help. We'll see. Let me try one more thing here real quick. Okay, so if you're new here, welcome. Thank you for coming. We are going to be demonstrating IWJ Pivot Point Pro. It is the indicator that we created, a partner of mine and myself, that has produced incredible results here just over the last couple of days. Yesterday wasn't great. It was a trend day down, but on Monday, the market dropped at the open and you got a sell signal right at the open. And then you got the cliff dive there. And then after that, that establishes a trend day. And so after that was chop for the rest of the day, but that first trade was excellent. And just some guidelines so you guys understand. The blue here, pre-market or post-market, the yellow pre-market, we don't trade any of that. So any signals you see during those times can be kind of ignored. And then some other stuff we have on the screen are call resistance. These are incredibly important levels, put support and call resistance, as well as the high volume levels and zero DTEs. Some of it overlaps, so it's hard to see here. This is your options flow, and this is honestly what controls the market on a day-to-day basis. And where you have the major call resistance and put support zones are going to be incredible zones to trade. You should always be looking for potential trades in those zones. So they ran it up here. They came right into the call resistance. They chopped here for a while, and then the indicator said, now this is pre-market, so we don't take this signal, but I'm just giving you an idea of how this works. We get a sell signal right here because they could not get through the call resistance strongly. And as soon as you got that, you got the nice push down there of 2 points, which would have been a really nice trade. Again, we don't trade pre-market. I'm just trying to show you an example here. They came down to the put support. That's the next level of support. So there's a really tight range between 681 and 680 that'll kind of decide the first part of the day that they're going to bounce in between. You can see they came right down to it, spiked it, and then bounced back up into the call resistance. So these are really important levels, and they come from Mentor Q. You can see them over here on the side of my screen. It is a paid service. but I do have a link in the description of this live stream that you can get 20% off of it. That helps me out. I do get a kickback for referring you. That helps them out. Obviously, they get a business, but it helps you out. It gives you these levels. If you don't know what I'm talking about exactly, um, zero DTE options have become the way the market makers, and the market makers are the people that control price for the most part. It's the way that they are now kind of controlling the market on a day-to-day basis. And so what they give you is they give you the highest level of calls. They give you a 1-day max up here. So you have two of them actually, which is 684.21 and 684.43. One of them is intraday and one of them is close. So if we turn off the intraday, you'll see the top one goes away. So they can spike it intraday through up to this level, but by the close, we would expect them to be back at or below this level to the upside. If they break down, they give you a 1-day minimum as well, and 674.14 and 673.49 are those levels. We treat these like the shorelines. So think of this as an ocean, and we're in the middle of the ocean and we're trying to get out, or the market's trying to get out. And if they start to break fully down, they're going to come into these levels. And most of the time, the shoreline holds. In fact, almost every single day, the ocean comes up to a certain level and then stops. We know where the tides are. We build houses based on it on the water. But sometimes there's hurricanes. Sometimes there's a major storm that comes through and pushes the tide way up into the houses or businesses or shoreline or whatever, and it goes past those levels. So is it possible that the market can break down above or below those levels? Yes. Does it happen very often? No. Much like a hurricane pushes water, you do get events that are not random, but anomalies. They're not the standard. They're not what we would expect. So anytime price comes down into the 1-day min, and I can show you yesterday, this was the 1-day min right here, and price immediately rocketed off of it, and then came down and tested it, and then rocketed off of it. So anytime price comes down into the 1-day min or goes up into the 1-day max, that's a great opportunity to look for reversals. But again, that doesn't mean that it works every time. Nothing in the market works every time, but it is an incredible placeholder for the market as well as these major levels in between. So the reason these levels are so important is for a day-to-day basis, this call up here, the 683, this is where the largest amount of options are stacked, call options, I should say. So that's people who want the market to go up. And there's an incredible amount of options stacked there. So that's why we have call resistance, because what happens is the market maker is selling these options to people. So when people are buying these calls, somebody has to sell them, right? It's just like you go into a store. If you're going to buy a jacket, there's got to be a store that sells that jacket. So the market maker essentially is selling you the jacket and saying, have fun, and then wants price to stay down here because they don't want to have to pay more money. So if they're selling calls, they need price to stay at or below this level in order to continue to make money. And they're not trying to make money on the calls themselves necessarily. They do, don't get me wrong, but there's a spread in between the bid and the ask. And that is called basically, in my opinion, the juice, like a gambler would use, or a bookie, I should say, would use. You got to bet 110 to win $100, and that extra 10 is called juice. That's what the books want. That's what the Vegas books want. They want that 10% juice, and they don't care who wins the game. They want the lines to basically be even. So if you have the Eagles and the Chiefs, they want $1,000 on the Eagles and $1,000 on the Chiefs, and they'll just collect the juice off of whoever loses. They want balance. That's what the market makers want. The problem for them is if price goes above this, well, they start to get in the red because they sold all these calls here, right? So what happens is they have to start buying calls to cover, or if you know anything about gambling, the casinos, if they get too much on one side of a bet, so let's say everybody bet on the Eagles, they'll go to another casino and bet heavily on the Chiefs, so that if the Chiefs do, or if the Eagles do win, I'm sorry, they'll go bet on the Eagles as well. Excuse me, I must have said that wrong. So if $1 million comes in on the Eagles and 0 comes in on the Chiefs, the casinos are very exposed to the Eagles. So what they need to do is cover that exposure. So they go to another casino and they bet the Eagles to cover that exposure so that they can balance their book, if you will. Well, that same thing happens in the markets. They are selling calls here, and if price goes above this, now they are very exposed to calls and price going up. So they have to start buying calls. Well, what that creates is a squeeze, right? So you get a squeeze, and that's when we see, these bars that start going crazy. Everybody's like, why is the market going up so fast? Well, because you don't understand the levels, you don't understand where the squeezes happen and why they happen. Same thing happens to the downside. If they go below this put support level, this is where all the puts are stacked. Well, they're selling puts to the people in the market. So if it goes below this, they're exposed to the market going down and they can lose a lot of money. So what they have to do is they have to start buying puts at an incredible level, which causes waterfalls. So squeezes are caused by call levels getting breached. Waterfalls are caused by put levels getting breached. That's why those levels are important. There's a link to those down in the description. If you want to get them 20% off, they're really, really valuable. I only promote two things, guys. I promote TradingView and I promote that I didn't make. I promote all my own stuff because I believe in my own stuff and I use it. But I use MentorQ every single day. I use TradingView every single day. It's the only two things I promote. I am not the guy that pushes crap just to push crap. If I use it and enjoy it, you'll hear about it. If I don't, I don't. I'm not doing that for a buck. So this MentorQ to me is one of the most valuable tools you can have. That was like a MentorQ should pay me for that. But it's really important. So those are two things. The next thing is we only trade until 1 o'clock because after that, the market gets pretty choppy and hard to trade. Volume dies out. People go to lunch. You're just trading algorithms. Algorithms are designed to beat you. They're designed to expose your predictable behavior and they condition you on top of it. So I'm writing a book that will explain all this, but essentially, you have the market maker who sets the levels, you have the algorithm who sets the traps, and then you have the analyst who sets the narrative. And all of that is done to condition you to be the predictable trader they want you to be. They want you to panic when they expect you to panic. They want you to be confident when they expect you to be confident. And they want you to be confused when they expect you to be confused because then they take advantage of you. So when people say the market is rigged, I say, yes, it is, in the sense that it conditions you to fail in a day-to-day basis. In a long-term basis, it's really hard to condition people to fail because they're just going to buy and hold and they don't have to worry about it. There's no stress. There is stress in that, don't get me wrong, but there's a lot less stress in that and people aren't too worried about if a stock goes down for a couple days. But in day-to-day trading or day trading, you are very worried if a stock goes down because you only have it for the day and you need it to be going up. So the market algorithms especially are designed to punish you. They're designed to set traps. So they're designed for you to see this and get short right here at the support level. When you get short at support, that might as well be cutting your throat because that's a terrible idea. They bounce it up, stop people out. They come back, say, no, no, you're good. Then you get back in and then they bounce it up and stop you out again. So these are the types of things that the indicator saves you from. It tells you it waited through all of this chop. It never gave you a short, never gave you a short, never gave you a short. And it said, okay, it's time. Here's the short. Again, pre-market, so we don't trade this signal. I'm just giving you examples of how this works. As soon as you got the short, the market chopped a couple more bars, but mostly went down. Okay, that's a winning trade right there in a day trade. If that's not a winning trade, if you're not making that a winning trade, you need to adjust your day trading strategy. And then we get more chop. Okay, now again, pre-market stuff, don't trade it. But that's the whole idea of the indicator is it takes all of these values. It takes the options. It takes momentum. It takes volume. It takes key levels. It takes RSI. So it takes some backwards looking things, but it takes mostly forward looking information. Finds the key levels. Finds when the momentum dies. Finds when the volume is right. Finds when it's prime options to enter a trade and get you into the market at that time. And if you follow our very simple rules, you will make money. Guys, in the last 2 months, we've made $50,000 trading 50 contracts. We started, so here, I'll just bring it up real quick because it's easiest to do that. While I'm pulling that up, please put in questions if you haven't already. I haven't looked at the chat because I get to rolling and then I forget to look at the chat. So I'll look at that in just a minute, answer all your questions, but go ahead and type them in if you have questions. There's an incredible deal we're running. It's the Black Friday deal. If you saw on the title, we've extended. I'm running it till the end of the year because of the moving and stuff. It's been very spotty. The internet's been bad. So as a kind of thank you for sticking around with me and still doing this. I'm running that deal to the end of the year. It's $39 for the indicator. It is 25% off the yearly indicator, which I never do. Um, so these are deals you're going to want to take advantage of because they are only till the end of the year. And there's a very solid chance the indicator price will be going up soon because it's been so successful and we've seen so much so much love for it. So we started in 2024. We've through this time we've adjusted the indicator several times. What you're seeing here is the month, the total gain per contract. So we trade 25. We were trading 25 contracts at a time on a $100,000 account. Okay, over the course of that year, did we have some losing months? Yep, March was a loser, and November and December sucked. That's part of trading. If you can't understand that losing is part of trading, you don't need to trade. You need to buy and hold and just never look at the market because you're going to lose. The greatest traders in the world have losing days, weeks, months, some of them even years, and they still are some of the greatest traders in the world. So you just have to understand there is risk, there's going to be losses, but if you follow the rules, you'll do incredible. The rules are all taught in the course when you buy it, and then you get the indicator, and if you follow those rules, you'll do really well. So over last year, we did 35,000. That was pretty good. 35% return on investment on a 100K account is pretty solid. We've made tweaks when we had these losing months. We found out that holiday volume caused issues with the indicator. Um, I think that tweak worked. In November, we had a record month of 26,900 this year. In October, we had $25,000 month. September was not a great month, and August was not a great month, and May. So, yeah, did we have losing months? Yep. But this year we're already up 83,000. We always improve the algorithm. We always improve what it's looking for, its calculations, how it gets better. 83,000 this year. We have 1 month left. It's been a really slow December, so I don't expect December to be a banger, but it should be decent. And we only have a few trading days left because I don't trade the end of the last week of the year. So an incredible 2 years because we did so well. We were able to move our contracts up to 50 here because of all the profit we had made. And on our 100K account, you can see that we have 108,000, almost 109,000 in profit. This is all detailed by a paid subscriber named Matt. He gives me, I have my own detailed trades, but to make sure that everything I say is true, Matt does the same thing. He gives me every month what he has, make sure it matches what I have, and it always does because he does a good job. And actually, his is always right. And there's been a few times where because I move so fast, I've had some typos and different things that he's corrected for me. But just to give you an example of what Matt sends me each month. One second here. Here's that. Can you read that? Just kidding. So this was last month in November. You saw it on my spreadsheet, but we were at 26,900, 83,750. We did have to go down to 25 contracts for a little bit of November, and the reason for that was really high volatility. So when options prices get like up to $3 a contract, that's super expensive. We don't want to be putting out too much of our capital on any given trade. We want very, very disciplined capital investment, 1 to 5% of your total capital, and then you want um, very, very disciplined stops, very, very disciplined profit taking. And we give you all of this. All of this is in the course on how to use the indicator, guys. It's really an incredible tool. That's what we're going to be featuring today. So we got 5 minutes. I'll go through any comments and questions and see what we have here. Peter Crowley, welcome to the stream. My microphone source is incorrect. No, it's on the right microphone. Tester, thank you. Welcome to the stream. Funny Nikki, was the indicator able to spot melt off of the individual stocks, for example, VEEV, after recent earnings? Let me ask you a question. Are you looking for swing or are you looking on the day trade aspect? Because the earnings come out after hours, and but it does incredible on individual stocks. But if we can look at VEEV, but give me a little clarity on what you're looking for. George, welcome to the stream. ES or MES contracts. We're actually trading SPY contracts, but you can. We have plenty of people that trade the mini ES and the ES both. We're trading SPY though, Sesame Street, and welcome to the stream. So I trade the SPY. I have plenty of futures traders in my group that do very, very well. But people ask me all the time, why don't you trade futures? There's so many benefits, and there are. I get it. To be quite honest, I just learned on the SPY. I am a creature of habit, very comfortable with what I do, and so that's just how it is. I probably should switch to futures if I'm being honest, but I'm too lazy. Actually, I should just say I'm too embedded. I'm not lazy. I'm just, when I get embedded, it hurts my head to want to change. The older you get, the less chain you want to change. Thief question follow-up for swing trading. Day trading is not good as the relatively low volume open stock with high spreads. I don't know who Vive is. Let me look who it is. I will tell you it should work on any stock. I will also tell you that I would be trading more like Mag 7 type stocks. It doesn't have to be the Mag 7. I'm just saying stocks that are highly liquid, highly traded, very, very high volume stocks because it's just going to work better on volume. That doesn't mean it can't work on other stocks. It means that those are the ones I would try to trade. I would try to stay out of, one guy sent me a thing and he said, this doesn't work. And I said, what are you trying to trade? And he's like, Verizon. And I said, Verizon's been at the same price for like 19 years. It's been at like $43 since I was born. I don't know why you would swing trade that stock. I don't even understand why you would trade that stock. It's a dividend. It's a nice stock to have as a dividend, but it's a terrible trading stock. It's one of the worst you could pick. And he couldn't get on board with understanding that. And that's okay. It's not for everybody. I'm not here to change your trading style. I'm here to enhance it and make it better. And anyway, I would be trading different stocks that actually have movement, not BS. So we'll do this. Let's see. We got 2 minutes. Let me see if I can do this real quick. We'll go to the weekly. We will go to the indicator. We need to change this really quickly to Vive. We need to change this one to V. We need to change this to 1. Okay. Okay, and then we gotta go down more. So yeah, it puts you in a cell back here at the 11th of August. And I tell everybody in my room you need at least 3 months at a minimum. That is the minimum trade, but more importantly, I would look for 6 months. So the last thing was in August. If you put it out for 6 months, that would have put you to like February. So you would have caught, you got in at, what was the close here? 280, and they're down to 219. So that's a 60-point drop on a 280 stock. That's pretty good. That's about 3%, right? Something like that. 2.5%, which ain't too bad. It's not great. This is a lot of chop through here. So this was not going to be a very good session on Vive. But overall, we're at the open, guys. We got to move. Let me go back to the other stuff here. Come on. So one of the major rules I didn't go over while we wait to see if we get, let me get set up here, guys. Sorry. Get to talking and then I forget what I'm doing. One of the major rules is we don't trade trend days. So you'll see a lot of chop and stuff on the chart sometimes, and I'm sorry, not chop. You'll see a lot of, what are we looking for? A buy? Oh, we got heavy options. We got to buy. So get in if you haven't already. Let me see where we're at here. All right, we're at 681. We're going to get in at 130 here. So 681, 130. And our stop is going to be 679.50. All right, we are in there like swimwear. I don't know how, let's see here. All right, we are in. I don't know if I got a great stop on this, but I might have. So we, sorry, let me slow down here. Now we're caught up. All right, our stop is 679.50. Typically, it's going to be 50 cents below SPY price. If you're trading a different stock like the NASDAQ or something else, you can adjust that, but you're not going to want to take huge hits. About 10 to 20% is what you're going to, 20% is really what you're going to want to lose on the option price at a max. Sometimes it'll be a little more than that. That's just the way it goes. But 20% is really where you're aiming for off the options price, because what we do is we take our first profit at 20%. So we close half of our trade at a 20% gain. And as price moves up, we adjust our stop. So when we get to a 10% gain, we move our stop up 25 cents. So I have a 50-cent stop price, right? So let's say it's, well, it's 679.50. So if we get up 10%, I will move that up to 679.75. So I move it up 25 cents. If we get to 15% profit, I move it up to break even on the contract price. So $1.30 would be my stop. And then at 20%, we take our first profit. We close half of the trade at 20%. And those are not really what we're looking for as far as what we want the trade to do. It's just a nice barometer or an area that we're going to take profit, because what that does is it protects our losing interest. So if we get, as we watch this here, I think I got time to do this. We'll see. Every time I think I have time, I don't, but whatever. So if this is our entry price, down here is our stop, okay, and up here is our 20% win. And we take a loss, right? And then we take a win, and then it gets stopped out. So that's like a 10% winner. And then we take a loss, and then we take a 20%, but then we get a runner. And then we come back down. Our next trade, we get a small winner, and then we get a runner, and then we get a loser. We're not looking for these small wins to be what we get overall, but what they do is they cancel out all of these stops or our losing trades. So our small winners cancel out our small losers because our stops are capped. And then from there, okay, these runners are basically all profit. So our risk reward is really, really well defined. And we keep ourselves out of risk by doing this. Are we going to experience losing trades? Yeah, about 4 out of 10 will be losers, roughly. And listen, you can have 7 out of 10 and still losers and still be a profitable trader. It's about your risk reward setup. The number of trades you win is irrelevant. The amount you win per trade is what matters. So if your risk reward structure is, hold on, we're about to get stopped. We just did. Okay, we took a stop at 109 there. We took a stop at 109 there, so a small loser, 21-cent loser, part of the deal. But the whole point of this is you're going to have losers, and those losers are countered by the small winners, and you get several runners. We get lots of runners. I would say probably 2 out of every 5 of our winning trades are runners, if not more. And Um, like I said, those are basically all profit. So the running portion of that is all profit. So the 20% is designed to cancel out the losers, and then the rest is designed to um, be profit. And that's how we built our risk reward structure so that it's so powerful. And that's what people don't understand about trading is it's not about wins and losses. Everybody thinks you have to have all these wins and you got to win every trade and everything. You got to be right. You got to name the price and you got to predict. No one cares. If you want to make money, no one cares. The people who make money don't give a crap about price as far as going up or down. They don't give a crap about predictions as far as Bitcoin's going to 140 or Bitcoin's going to 25. I don't care where Bitcoin goes. I care about making money. So I want to devise a structure that allows me to do that. And what I've done is put together Pivot Point Pro with a set of rules for taking profit and taking losses that does that for you. So all you have to do is follow the rules, get out of the trades when it says to get out, ignore trades on trend days. And we have one other one that's called 3 strikes and you're out. And that means if, in order to avoid extremely choppy days, if we have a buy and it loses, a buy and it loses, a buy and it loses, then we're done trading for that day. It doesn't matter if we miss moves. Good traders know they're going to miss a lot of moves. But guess what? The market trades almost 24 hours a day, almost 7 days a week. There's always an opportunity to trade. So missing a move is the most irrelevant thing anyone could ever say, and it should not cause an ounce of emotion in you if you understand trading. But that's the problem. Most people don't, and it causes lots of emotion. Oh, we missed a 20-point move. We missed a 100-point move. We missed a 500-point move. Yep, there'll be more. There'll be another one another day. It doesn't matter. Stay focused on making money. Stay focused on discipline. Stay focused on following the system to a T, and you will be um, successful. It cracks me up, these guys that come in, they pay for a service, and then they want to tell you how to make things better. It's like going to the NFL, and well, everybody does this. Everybody does this. It's like going to, they just do it from their recliner. Going to the NFL and having um, somebody like Bill Parcells say, I'm going to teach you how to coach. I'm going to teach you how to coach football at the highest level. I've won several Super Bowls. I've taken losing teams. I've turned them into winners. I know how to coach football successfully. And you going, hey, that's a cool play, but what if the receiver did this instead, or if we blocked it different? Wouldn't that be better? Probably not. Probably Bill Parcells, who spent his entire life doing this, thought of that, or didn't need to think of it because the other way worked really well, right? So if you are not a professional trader, and quite frankly, be honest with yourself, if you are a losing trader, which this is not a knock on anybody sitting here right now, most traders who day trade are losing traders. If you honestly can't make money and enough to support yourself trading, then you don't need to adjust anything. You need to simply follow the rules. It's a really, really important concept that traders let their egos get in the way. They want certainty and they want to tell you what they know and they want to tell you what they've heard and what this guy on YouTube said and what this guy over here said. Pick who you like. I don't care what you do there. Pick who you like. You don't have to trade with me, trade, or you don't have to trade with anybody. But if you're going to trade with someone who's successful, then listen to them. They are successful for a reason. Someone told me a long time ago, if you're not outperforming the S&P 500 on your own, then you shouldn't be day or swing trading. You should be just buy and hold. Buy the S&P and just hold it. Because if you can't outperform it, you're losing money, right? If the S&P is making 10% on the year and you're making 5% or losing money, then you're missing out on all that extra S&P gain trying to outsmart the market. That goes to coaching as well. If you are listening to someone and you're not able on your own to replicate their results, then you need to just listen and do exactly what they're saying because they do it for a reason. You know, I watched The Karate Kid. We've all seen The Karate Kid, I'm sure. Daniel has no idea why he's waxing the floor or waxing the cars or sanding the floor, or painting the fence or painting the house. He has no idea. He thinks he's doing chores. He thinks it's boring and it's stupid. And what's he learning? He's learning karate. Trading done properly is boring and stupid, but it's trading done properly. That's it. It's a very, very simple game if you just follow the rules. Trading is so simple, especially when you know and you let your emotions go. You'll go back and look at the chart and you'll say, why would I have ever traded there? What is the point of that? So just some thoughts I have from time to time. This market is pushing down pretty hard against an ADD that's rising pretty decently. So I would expect a pretty strong buy coming in at some point, probably at this point off of this after hours low down here around 676.92, given the failed breakout they just had, or the failed rally they just had. They don't have to come all the way down there. Let me look at the chart. Actually, they're at pretty good support right here. So anywhere in this region down to the after hours low, I would look for a pretty powerful buy to come in that will rip back up. The Vold is also positive. We're seeing a lot of more positive things, even though the markets are slightly red right now. So that does tell me, and RTY is absolutely crushing it at 1%. Transports are are flat basically. Actually, banks are green though. So all the supporting evidence is telling us that there should be a buy incoming, and we are, we had a buy that failed up here. We'll see if we get another buy. But if you're looking at just the market right now, and these are the things most people don't observe, is yeah, it looks red, like they're selling, right? Ooh, selling. But in the under the hood, you actually have good things happening. So, I don't know anything about cars, and one time I was driving down the road, and literally every light on my dashboard came on, and my car stopped working. I had no idea what had happened, but the turned out the serpentine belt had broken, and um, that's kind of what you're doing in reverse here. So everything seemed fine on the surface, but under the hood, my serpentine belt was about to break, and then my whole car broke down. Well, right now, everything seems like it's going to go crashing down, but under the hood, there's a lot of buying going on that you don't see if you're not paying attention. And that usually leads to a significant reversal or a low incoming that will get bought. All right, let's look at some questions if we have any, because I've been talking way too long here. I've been rambling. Quietly waiting for the Santa Claus rally. Yeah, I think we're gonna get it. We don't get it every year. People are confused. The actual true Santa Claus rally is the 25th through the 31st, roughly. Christmas to New Year's. Hold on, we're gonna have a buy coming. I'm thinking. Let me get ready for that. I'd like to see 67.70 or 67 to 67.40 on the ES. That'd be a great buy zone for the rally into the end of the year, assuming we get a reaction off of it. Let me get set up here 1 second, guys. I've been talking. I need to reset up the trades so that when they do come through, I am ready. So something I do that I think would be beneficial to people is I have my trade completely set up, meaning um, that as soon as the trade appears, all I have to do is press my mouse, and I have a limit spread that's wide. So I'm doing a limit order. I don't do market orders. That's a disaster. But what I do is, so price right now at the strike I want is about 147. That's going down, but at any rate, it was at about 147. We'll say 150 for easy math. So I'll have my limit order in at about 160, 162, something like that. So that as soon as I see the buy, and I just continue to move that up as price moves up, as soon as I see the buy, if the buy's at 150 and my limit's at 152 or 162, I'm very likely to get filled in there, and I'm probably going to get filled depending on how fast it moves between 150 and 154, something like that. But I'm going to get filled right away, and without having to do a market where I could get filled 15, 20, 30 cents different. So I always have my trade up, ready, and all I have to do is click the button to go, and that's how I get filled very quickly and for the price I want. We are coming down into this 676.92 zone. Now, a break of that and a back test, and I have to enforce. So what we're looking for a trend day is a break of the whatever's lower, the after hours low or the pre-market low, whichever one is lower, the overnight low essentially. Then you're looking for a back test of any of these three things, which is the 21 exponential moving average, VWAP, or the 8 exponential moving average, a back test, and then a failure back below this low right here, and that constitutes a trend day. So they break the range, the overnight range, they back test into the range and against the key levels, and then they break the low that they made earlier. That is a trend day down. Same thing to the upside. They break the overnight high, they back test, and then they go back and break the high that they made before the back test, and that constitutes a trend day. Still haven't looked at the chat. Let me try that one more time. I am currently on a 679 strike, yes. People spent the money on extra packages for Halloween, Santa Claus, and Christmas, yeah. Cats at home, if I didn't say it, welcome to the stream. Now, let me be clear, they can spike this low and reverse. That's not a trend day. They can spike this and reverse all the way back to the top. A trend day, again, they have to back test these moving averages or near them. Like if they got up here to the yesterday's close, that's a pretty good place to back test, and then came down, I would still consider that a trend day. I'm just looking for a bounce and then a reclaim of the low. But usually that bounce goes back to test a key level. Well, I think I'm gonna need to change off of Wednesdays. Wednesdays have been terrible trading days. Every time I live stream, it seems like it's a terrible trading day. All right, here we go. We're looking for a buy here. Never anticipate the trade. So just because you see this bar right here, don't get long and say, oh, it's coming. There's definitely going to be a buy coming. One, you don't know if the ES and the NQ are out of sync. Very often, not very often, that's an unfair statement. There are times when the NQ and the ES are in different types of cycles. So one will be in a buy and one will be in a sell, even though they look similar. There's a reason for the mathematical logic that we use. And in those cases, they're going to want to fill that gap. In those cases, you won't get a buy or sell signal, and almost always, if you had gotten it, it would have failed because they're not in sync. So if the NASDAQ wasn't in sync with buying right now, right, you may have gotten a buy signal on the SPY, but the NASDAQ said no, and then it does this because the NASDAQ said, I'm not ready to go. So they need to be in sync. So don't try to front run signals. Just follow the rules, and when you get them, you get them. This gap makes me really unhappy. I really wish they would have filled this gap because they're going to likely fill it today. And if we get a buy signal, that's going to be annoying. Come down and fill it first, please. Almost. Ah, you're killing me. Killing me, Smalls. Anybody know what that's from? Some more what? Sandlot is correct, Williamstown. Welcome to the stream. You get a thumbs up. We haven't had much in the way of trading, but if the information has been good, feel free to hit that like button. I appreciate it. It helps me out. There we go. Close the gap. Thank you. I knew they were going to close it. I just wanted it to be, I wanted it to be before we got a buy signal. this would be a perfect time for a spike down into the AHL because this is a good trap right here. You've got what looks like a reversal starting. And very often they'll give you that fake reversal, then make a new low, then give you the real reversal so that they can trap and screw as many people as possible. But this looks like a perfect opportunity for that type of setup where they spike it down real hard like it's gonna crash, hit the after hours low, and up we go. Sunny K. Paul, welcome to the stream. Thanks for setting up these live sessions. Since the daily min was much lower than the daily max at open, would it suggest we're likely to have a down day than an up day? Not necessarily. You still have plenty of room to the upside, and remember, upside can grind really slowly into targets. So, and you know, a lot of times we've seen them do this where they go, and I don't know if it was significant. I mean, 684 from 680, about 4 points. Now, where's the minimum at? Let's see where they're at. 674 from 6. They're about the same. I mean, this wasn't significantly worse. 685 and 674. We opened at about 680. So like 5 points each. Yeah, I think they're about the same. Anyway, point being, they can grind up here and then do this all day where they really never reject. That happens. And then maybe at the close they do or something. They don't have to reject. They can sit up there all day. So no, I don't necessarily. The only time that I see huge red flags, and these are awesome days, by the way. I've made absolute mints on these kinds of days. When the price opens and it's already at the 1 day max or the 1 day min, or even above or below is even better, and you just wait patiently for the reversal signal, those are the days that you want to load up and just sit back and wait. Because especially if you get, so if you open above the 1 day max, right? The first thing you want to do is you want to watch the ADD. The ADD is going to likely open green 800 to 1500, somewhere in there. You're looking for that to start cratering to the downside. If that happens, load up. Don't load up. Go to a full size position. Go to a full size position. There's no more than a full size position. But if you normally do a half size, you want to do a full size, that's the time to do it. Those are the days where the risk reward is enormous because you'll stop out. You still use the same stops, guys. You don't like give yourself some enormous stop and just say it's gonna happen, but it almost always does. And when it does, it's usually like a 12-to-1 return on investment because it's almost always going to go back to the bottom of the range, which is usually going to be the 1 day min, which is usually like a 7 or 8 point drop at a minimum. So far, they gave you this little fake reversal candle. I said this setup was good for them to trap as many people as possible. So they came down almost where they wanted to get to. Then they gave you a fake reversal candle. Got everybody, as soon as they took out this high right here, people got long. They trapped all of them, reversed them. Now everybody's going to jump short and say, oh, the breakout failed. We're going down. And if they don't get out at the after hours low, my bet is that this after hours low holds and we see a pretty strong spike to the upside. With CPI and unemployment claims coming out tomorrow, would you expect huge moves tomorrow? And if so, in which direction? They are definitely catalysts that can move the market a lot. You don't always get a big move on those, but you can. I mean, CPI is one that definitely has the ability to push the market around pretty quickly, um, especially with unemployment, because now jobs is the big quote unquote motivating factor of the market. So they use that one as a bigger catalyst. As far as which direction, I would like to see them hit 67.70 to 67.50 roughly. So if we get down near those levels today, which would be what, another 50-point drop, that'd be close, yeah. If we see that today, then I would expect them to give maybe a spike down in reversal back up. If we don't get down to those levels today, it really is just going to kind of depend on structure. But I'd like to see them go down and tag 67.50 to 70. That is the most likely area for them to come down into. So before they rally. So I would say it depends on the close today, but I could see them spiking into that level and then reversing off of it. Where tomorrow CPI we open the market in that 6,700 zone somewhere, and then tomorrow is a ripping ride higher that closes gaps and does all that kind of stuff. How's my trading challenge doing? What's my portfolio makeup? It's day trading, so there's no portfolio, and it's going really well. I am 1 second here. Sorry. Okay. I am well into the green, and as far as the challenge goes, it's a long challenge. So right now it's harder to say, but I'm in the top 10 of the group. There's about 50 people in it, and so far so good. Thanks for asking. Big option expiration Friday. Is it monthly options Friday? Let's see. That'd be the 20th. Is that right? Let's say Wednesday 19th. So yeah, I guess that would be options expiration then. Last one of the year. I'm looking for. I don't do timelines on the market because I find time to be a little less reliable. Personally, I know there are lots of people that use time, and that's fine. I never tell anybody what to trade or what they can or can't trade. Whatever style and whatever thing works for you, use it. As long as it's profitable, you have a good structure, and you have a good trading plan, there are a trillion ways, there are infinite ways to trade the market. Infinite. Just in options alone, I can come up with, I don't know, millions of strategies that all work if used properly. That's the thing. Everybody's looking for this new secret strategy that kills the market. There is no secret strategy. It's whatever strategy works for you. They are all good strategies. No, they're not all good. A good strategy is a good strategy is what I'm trying to say. It doesn't have to be options. It doesn't have to be buy and hold. It doesn't have to be swing. It doesn't have to be iron condors. It doesn't have to be buying 60% stocks and 40% bonds. It doesn't have to be anything like that. It can be completely different and completely successful all at the same time. And the number one thing we do as humans, and I get it, we've been conditioned by assholes and snake oil salesmen and scam artists and everything else, is to hear something we don't understand and immediately dismiss it as a scam or a way to lose all your money or some other uninformed statement. And it's really a detriment. I would always encourage you to say, let me hear what you have to say. Let me see why you say it works, and then let me make my own judgment on it. I'm not going to ever listen to anybody tell me what does and doesn't work, unless it's somebody that I trust and know, and this is the big one, that I trust and know has knowledge of that subject. Just because my dad is my dad and one of the smartest people I ever dealt with, and somebody I would ask for anything, doesn't mean that he knows everything, and that if I go to him about something that he has no knowledge about, that he should be telling me about it. And he was one of the few people that would very, very openly say, son, that's something I'm not well versed in. You may want to ask this person who I know is, or you may want to do your own research, or you may want to figure it out. That's the best thing you can do. It will make you a much smarter person. It will make you well informed, and it will make you understand so much more of so many things, from stock trading to people. You know, if somebody says X type of person is this, X type of religion is this, X type of this is this, I'm going to find that out on my own. You know, one of the things I did that I thought was, for me, one of the more enlightening experiences I ever had, because I grew up in Kentucky, and where I grew up is pretty much white. And this is not a political thing. I'm not trying to get political on anybody. I don't want this to turn into a political thing. I'm giving you observations of life. Um, whether I'm qualified to or not, I guess that's what I'm doing until we get a trade. And obviously, the George Floyd thing happened. America has been in turmoil really before and since. And, you know, one of my friends who is a black guy, I just sat down with him and I said, hey, would you mind doing a podcast with me? And I'm going to not play I am the dumb white guy. And you're going to, you know, I'm going to ask you questions and you're going to inform me. And then we're going to have discussions about it, open debate. I'm a little more conservative leaning. He's a little more liberal leaning. And we had a podcast called Honestly Uncomfortable. And we talked about a lot of uncomfortable topics. And it made me understand so much more about, you know, the black community and how they operate and what their views are and why they have those views. Whether I agreed with all of them or not was irrelevant. It's at least I understood why they felt the way they felt, or why he felt the way. I don't, you know, we don't want to marginalize and put everybody in one thinking tank, but why at least he felt the way he felt. And then you can kind of extrapolate that out and say, okay, I can see why these feelings are being had. And it was really enlightening. And those are the types of things you should do as a person, because it'll just make you a more complete and better person. And it doesn't have to change your worldview. It just has to give you empathy and understanding, which is the number one thing we lack in the world today. Everybody is quick to judge, point out, yell at, critique. Nah, I'll get off my soapbox. Sorry, guys. This is not a lifestyle podcast. I apologize. I just get on rants. But anyway, that's my 2 cents on that stuff. Um, do with it what you will. Hopefully we get a buy here soon. They're starting to give a structure I like. When there's nothing going on, I just start talking and then things come out. Whatever. All right, there we go. We are in at 679. We got 194. Our stop is going to be 679.10. I'm going to go ahead and post that in the other room. Okay, so 194, it's going to be basically 20 cents. So what's that, 114 or 214? So at 214, we're going to move our stop up. At 234, we collect. And in between that, at 220, basically. No, that's not right. 214, 224, we'll move it up to break even. So 214, 224, 234. If we can get there. They rejected the 21 there. Oh boy, they're going to reject us straight down to a fail? No, come on. There we go. Nope, they are. Okay, 173 on that one. 21 held. We get stopped out. 0 for 2. Not a good day. Wednesdays, man, they suck. If that buy comes back, I will take it again. Reason being, I do like this structure. They've made a low, they made a higher low, they made a high, they made a higher high. If they hold this low and we get this buyback, rejecting the 21 is perfectly reasonable, as long as it doesn't fail. Rejecting the 21 and holding, going back up, good. Rejecting the 21, breaking this low right here, not so good. Otis Page says yours is the best. I appreciate that, Otis. Thank you. I assume you're talking about my trading strategy. George says keep preaching. I appreciate it, George. Thank you. I don't know that I should be preaching to anyone. I just talk. Probably too much. All right, rejection of the 21 leads us down lower than this low, which isn't great. I mean, it's basically an equal low, but they did technically make a lower low here. So you would expect them to come down now and probably test 677.95, whatever this one is. What was the low here? 677.89. Let's see if they can hold that, and if they can hold that, then we can potentially see another buy signal on the back side of this. That would be our third chance. If we failed that one, it's 3 strikes and you're out. BTC is ripping. Do they anticipate an upper move on SPX that didn't show up yet? They don't trade in step. I would not look for Bitcoin and the S&P to trade in the same direction. All of that stuff is nonsense, quite frankly. I can show you tons of charts where they trade in opposite directions. I can show you, everybody says, oh, gold is inverse to the S&P because people get into gold when the markets are terrible. Well, gold's at all-time highs. The S&P is basically at all-time highs. So you're gonna have to explain to me how that correlates, because it doesn't. It's just when it's convenient, people talk about correlations, like the yen carry trade. The last time the market, because the yen carry trade, the market crashed in April. That market crash was predicted long before yen carry was a thing, and if you go back and look at like the last 3 or 4 times there's been a yen carry trade, 2 of those 3 times the market absolutely ripped higher. So just because they correlated once, everybody wants to talk about a correlation, and correlations are not a thing to me. They are the only 2 I correlate are the NQ and the ES, because the Mag 7 makes up like 30% of the ES, or the NQ makes up like 30% of the ES, which is silly, but it does. So they trade very, very much in step, because the biggest parts of the NQ are in the ES, so it's a heavy weight. I join your stream every Wednesday because I like the things you say. Believe it or not, you're a true human being. I appreciate that, George. Warts and all, I'm here. I am not certainly not anything to go on about, but I am at least honest and here, and yeah, I try not to filter too much. The only thing I keep out of conversation for these types of things is religion and politics because they're just no fun for anybody anymore. They used to be fun debate topics. I was in debate when I was in high school, and I love debate. I think debate is so much fun. Now debate is just anger and fight instead of understanding and counterpoint and things like that. If you're willing to have a reasonable conversation, I would love to sit down and talk any topic with anybody anytime because I like to learn. I think if I don't know something, I Google it. I don't just say I don't know why that works. My daughter asks me stuff all the time, and I say let's look it up together because I don't know the answer to that question. But then she asks me questions like, "Do you think birds have nightmares?" And I'm like, sure, why not? I don't think Google knows either. I appreciate that though, George. Thank you very much. All right, we've slowed down to an extreme crawl here, so hopefully we get some pickup in price and get another opportunity here to push this higher. It does look like they're trying to build a base here, so I would expect a little bit of a squeeze coming. You can call this a feedback loop squeeze, which means the bears are continuing to fail, 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 and eventually there's going to be a feedback loop here that says to the bulls, we should buy, and they get squeezed. All right, here we go. 161. Our stop is going to be 678.50. That's a 679 strike. So 161 on a 679 strike, 678.50. Hopefully we can get up and out of here off the mat. Otherwise, it's 3 strikes and you're out. And that's just one of those days. But this is an authentic channel. We show our losses and our wins because if you cherry pick and only show your wins, well, that's not fair. That's not fair to you guys. Last bullet. All right, so we're dealing with 161 as our entry. If we can get off the mat here, come on. Man. Okay, we're going to take a 140 dip on that one. So 21 cents on that one. So this happens, guys. We obviously in October and November, when you're up 26,000, you have a long winning streak. You have several of them actually, and you have losing streaks. Today was a 3 strikes and you're out rule day. You get all this chop down here. They can't get off the mat, and that is not good for anybody. So we invoke our rule. Now, here's what I'll tell you. It's probably likely that this is going to happen later. Maybe the next bar, maybe 10 bars from now, maybe at the close. I don't know. No one knows exactly when, but I'm not here to throw another 20 cents, 20 cents, 20 cents, 20 cents at it, trying to figure that out. So this is why the three strikes rule goes into effect. It's because of choppy days. Um, so when you have choppy days like this, it's bad trading. You need days with movement. And we're not going to try to find that movement after we've donated enough. It's like, what's a good example of that? It's like you have, well, no, that's not. Anyway, it's like you have choppy behavior and you don't know exactly when it's going to break out. Am I confident it's going to break out? I wouldn't say like I would bet the farm on it, but I would say, um, given this structure, we're probably going to see something like this actually. But I don't know. You know, this is not a structure that is conducive to prediction. But I can look at the ADD and see that we're 962 positive, and I can look at the RTY and see that we're up 1.5% and climbing. I can look at the Dow Jones transports and see that we're up 0.5%. The banks were up 0.75% and tell you that that is very, very, very often going to produce a reversal. Um, but you don't always know when, and we're not going to throw away money trying to find it. So these are the days that you have to put on your big boy shorts or big girl shorts and say, it's okay to miss a move. If they go higher later and I don't get it, that's fine, because there can be 7 more signals that come up before it goes higher, and we don't want to waste money on those. So keep in mind the strategy is there for a reason. You're gonna miss moves. It just is what it is. We've had probably 3 trend days in December fail, and that's okay. They fail sometimes, but that does, 3 of them's a lot. But that's where you get a trend day setup, and then you get a buy signal that works out, and we miss this move. Well, we missed this move because the other 25 trend days that didn't fail would have eaten up so much money that this move wouldn't even have got us back to break even. Okay, so you have to understand that to get to where you're going, you can't lose all your money. So trying to chase, well, that's an analogy I use in my book, or a story I use in my book. The first win is almost like, and let me clarify, I've never done this. It's just what I've researched and seen and heard stories about. And my wife loves addiction shows and stuff. But your first big win in the market is like a taste of heroin, where you have this incredible high, you feel invincible, everything is amazing, and then you chase that feeling again for the rest of your trading career because it never feels the same. And you have to let go of the feeling of winning and the feeling of losing, because they are both equally detrimental to your trading health. And uh, the uh, the it's not adrenaline, what is it that I can't, the endorphins you get from the high of winning make you enter trades or get mad about missing a chance at getting a win like that again, and it conditions you. It's all about the market conditioning you to fail. So I said at the beginning of the broadcast, if you weren't here, that if you think the market is rigged, you're right. It's rigged in the sense that it conditions you to fail. In day trading, I got to be clear about that. In the long term, the market is, if you're just buy and hold and you're buying good stocks, it's not conditioning or doing anything, it's just running its course. But for day trading, because the market makers need to protect their money, they do move the market in a way that conditions you to fail. Once you understand how the market makers move the market, you can start to adjust your trading style and do the things they don't want you to do, which is unpredictable. The market wants you to be predictable. If you're predictable, then it's so easy for the algorithms to beat you, and they will, over and over and over again until you're broke. Then you'll get a new account and they will beat you because you haven't taken the time to learn and change your trading style and change your mentality when you look at the market, change your approach to the market, change your trading style because of how the market conditions you. You are the gambler, the market is the casino. I want to be the casino. I don't want to be the gambler. Do casinos lose money? on a given day if they give up a jackpot? Yeah. Over time, absolutely not. You don't build billion-dollar casinos over and over and over again on losing money. So um, you want to be the casino, and the casino follows the rules. They program their slot machines to pay an exact amount. That's like taking profit. They program their blackjack to play an exact way. That is playing the odds. They program their roulette odds to pay them more, so the payout is less than the true odds, so that the odds are always stacked in the casino's favor. Just because the odds are stacked in your favor doesn't mean you win every bet. It means that over time you will win, and that is the mentality you must have. You must have the casino's mentality, not the gamblers. If you have the gambler's mentality, you're going to have days where you hit the jackpot. Like maybe this buy signal right here goes crazy, but you're also going to have days that you lose 10 times whatever you put down here. So you have to understand that mentality. It is the most important thing. The mental game is far more important than the structure. I will take a bad trader who has the ability to control themselves mentally over a good trader who cannot control their emotions, because the bad trader may stumble and make mistakes, but their emotions will not blow up their account. So keep all those things in mind, especially on days like today where it gets frustrating because you are using the indicator and it's not going your way. That's going to be anything you do. If you switch and you say, Jacob's indicator is stupid, I'm going to go get Kevin's indicator. I guarantee you Kevin's indicator is going to act the same way and probably have the same type of rules or whatever. It may be a better or worse indicator. I can't tell you any of those things. But it's not going to fix your emotions, and it's not going to fix your mindset. And that's what you have to control as a trader. And that's what's important about these kind of losing days where you get 3 strikes and you're out. Go take a walk, go work out, go spend time with your family. People need to do more of that. Go hang out with your wife or son. Go play with your dog. Do whatever you got to do. Don't trade. It'll make you a better trader, I promise. All right, with that, since we don't have many more trades, I'm going to go ahead and wrap up the stream. Unfortunately, it wasn't a good one for us. That's how it goes in trading, guys. That is part of it. Have a wonderful day out there, everyone. Oh, this is you know what? Merry Christmas, Happy New Year, Happy Holidays. I won't be back until after the New Year, because next week is the 24th, and the week after that is New Year's Eve. So you have Christmas Eve and New Year's Eve on Wednesday back to back. So I won't be back until next year. So if you're not a subscriber and I don't talk to you every day, then and you only come to the live streams, one, I appreciate you. Thank you very much for being here. Happy 2026. Let's make next year a great year. Thanks, everybody. Real quick, I'll go through these questions. Sorry, I was about to cut this off, but I see some questions. Sam, welcome to the stream. Good morning. Would you expect huge moves up today, considering NVIDIA, AVGO, and Google are down more than 2%? Where they're at right now is irrelevant to where they're going to be at the close. Yes, they're having a down day. Yes, they are, negative. Who'd you say? NVIDIA, they're down 2%. AVGO, I don't have on my chart right now. And Google. Careful with Google, guys. If it starts to break down, it can break down fast. We'll go over that in the live call today in my room. But yeah, so the market isn't, the Mag 7 versus the market is a real thing, but you have 1, 2, 3, 4, 5 of the Mag 7 green and 2 red. And then, yeah, AVGO is a big one too, so that you can throw them in there. But you still have more green than red, and they're going to find a bottom. I mean, they don't have to find a bottom. Let me clarify that. But it's very easy for them to find a bottom and then rip back up a point, and they only got to go up, 0.5% to move the market a decent amount, enough for a day trade, right? We're not talking about moving the market up to 700 today, but if you wanted to move up 2 points for a day trade, yeah, I think that's likely, especially if you look at the breadth of the market and the buying of the market overall. So, by the way, in a big scheme of things, really, really bad that RTY is leading after rate cuts, because you really want tech to lead after rate cuts. If they aren't, that is a very historically bad sign for the markets. It tells you we're in late stage of a major bull market, and that is something I've been talking about for a long time. Big ups to Jacob's point about indicators being similar and the process being focused. JG's is tops in both departments. Thank you, Jack. I appreciate that. Welcome to the stream. VS V Siva, Merry Christmas. Thank you. You as well. Great stuff on a tough morning. When will beta group be here? Update on plan. Are you talking about the AI? That's I can put that out there. Kevin, are you talking about the AI stuff that I'm doing? Or are you talking about something else? I'm not sure. But while I'm waiting for Kevin to respond, if he's still here, you guys may have jumped off. Sorry. Uh, I am putting out a Invest with Jacob AI that will basically be like having me in your pocket, where you can upload charts and ask it questions based on my indicator logic and trading rules and all of the stuff that I use, and it will spit out a game plan for you for the day, tell you the key levels, where to look for reversals, where to look for inputs and buys and sells. It's going to be that's just going to be one thing it does. It's going to have quite a bit of power, and we'll demonstrate it on here once it gets up and running. I'm hoping to have it done on during the break here and demonstrate it. Hopefully, the first of the year, at least give a a little sneak peek at what's to come if it's not ready, but it's going to be pretty awesome. So that will be coming down the pipe soon. All right, now truly end of story. And you see here, this buy likely got stopped out as well. I don't know what let's 87 and 30. It's close, maybe not, but still getting a lot of chop here. So just be careful today. Don't overtrade. Try to follow the rules. Like I said, go do something more fun. All right, for real now. Thank you guys very much. Merry Christmas, Happy Holidays, Happy New Year. See you next year.